Hello everyone, welcome back to my channel. I'm back with the monthly series of my M1 Finance portfolio. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. You guys know that this portfolio is way different than my Robinhood one. This is very small in comparison to the Robinhood one. I do invest in here in different stocks that in the Robinhood. As you guys know that in Robinhood, I invest also in blue chip, big cap tech stocks and growth stocks, but also invest in more risky bets or spec moves such as non-profitable high-risk companies, which in here I do not, as I want to use this as an experiment in order to compare both portfolios in the long term, the return of both portfolio, and see which strategy is better in the long term and maybe which one is less stressful. And you're going to see why I say that. Now, as you can see, my portfolio is at $1,258 per share. $1,258, which this is a smaller portfolio than Robinhood, as I said before. And you can see that it's only up about $100 since December, and it's mainly because I deposited money. Because as you can see, it is only up $6.62, which it says it's 2.80% in returns, but it's actually 40% in return, as I have 5.01% gains from the market and $1.61 from dividends from the funds and Apple and other stocks that pay dividends. At the moment, I don't have cash here as I deposited money on Friday. I'm filming this video on February 5th. So basically, I will receive that money on Monday, and you will see this video on Wednesday. So yes, we can see the only thing that I don't love about M1 Finance is this chart. As you can see, it looks incredible. It looks like my portfolio is doing excellent, it's doing great, I'm making a lot of money. But the thing is that this chart takes into consideration also every deposit I make to this account. So if I were to withdraw $500, you will see this chart drop in $500, and it is not because my investments are dropping, it is mainly because I withdraw $500, which is the only thing I don't like about this platform, that the graph is not as real as maybe in Fidelity, Robinhood, TD Ameritrade, Interactive Brokers, and more. But now let's go and check my pies. As you can see, on the tech pie is the same. It's Tesla, Google, Amazon, Facebook, Apple, and Microsoft. Tesla has an average cost of $748 per share, which represents 26.6% of my portfolio. Google has an average cost of $2,600 per share, which at the moment I only have 0.04 shares, but in July that will change as they announce a split of 24-1, which obviously is incredible for many retail investors that were not able to invest in Google because it was at $2,800, and not everyone has $2,800 to invest in a single stock. Now then, for Amazon, it has an average cost of $3,200, which you guys know that I like it below $3,200, but I love it below $3,000. So I'm taking into consideration investing more at the moment. Still, as we can see, I'm actually down $5.96 in Amazon, and it represents 19.7%. Now for Facebook, I have an average cost, which is a little bit high, of $3,327. I do have to say that we can see this huge drop here is mainly because the stock dropped massively, as you guys know, after the reported earnings. So I'm losing $36 in this investment. Then for Apple, I have an average cost of $143 per share. And last but not least, for Microsoft, I have an average cost of $282 per share. In here, you can see this one is what I want this company to represent in my portfolio, and the top one is what it actually represents. So for example, Apple, I want Apple to be 10% of my portfolio, but it is 10.4. So right now it is kind of balanced, as we can see that everything is down. As we can see in the past month, almost everything is red except for Google, that is up 0.17%, but Tesla is down almost 19%, Amazon 4.40%, Facebook 30%, Apple 3.36%, and Microsoft 6.38%. Because as you can see here, the stocks were doing mainly good in the past month. And if we check the past 3 months, way better. Apple was even going up. Yes, all of the other ones were already dropping, but the volatility started in the past 2 weeks when they started reporting earnings. As we can see, this yellow one is Netflix. It dropped massively after they reported earnings. Then this blue one is Facebook. It dropped massively as well. Amazon dropped massively after Facebook reported earnings, but then it recovered. But we can see that in the past month, Netflix is down 31%. Facebook is down 29%, Amazon 17%, Apple 4%, and Google, even with the huge uptrend from last week, is down 1.9 to 22%. Then on my second pie, we have the same three funds, which are VGT, VTI, and VOO. I have to say that all of them are down, as we can see here, as even though I started investing in these funds on October, and we know how everything has been going since October. As we can see, the S&P 500 since October here is down 3.43%. So I'm down as well, and that is why I believe it is a good time to invest. That's why I'm waiting for that cash to enter to invest the first part of the money. As you guys know, that I deposit money monthly on this portfolio, and I divide that money in three, which is at the beginning of the month, at the middle of the month, and at the end of the month, which without caring how the stock is doing, if it's up massively or down massively. But I do have to say that I've been thinking of kind of changing this pie and maybe delete this VTI ETF, even though I like it, which is the total stock market. VO and VTI tend to perform almost as the same. As you can see here in the past month, we can see that VGT, which is the technology one, is down 9.5%. The VTI is down 7.4%. And the VOO is down 6%. In the past year, we can see the VOO have had the best performance, and in the past 5 years, we can see that the blue one and the green one, which is the VOO and VTI, have performed almost as the same, even though one is up 95% and the other one is up 89%. But the VGT is up 222% in the past 5 years, as it focuses a little bit more on technology, which is mainly what I focus as well. But now, I don't believe I will delete it, but I've been thinking about it. Now, I have not added a pie, as I said in my last video on January, as with this drop, I've mainly focused on dollar cost averaging and increase my position on the stocks and investments that I already have. So we can see here, the activity is that I bought eight things on January 6th, as we can see: Facebook, Amazon, VTI, Apple, Google, Microsoft, VOO, and VGT. Then on January 19th, I bought 8 things as well for $83. And last but not least, for $86, I did 9 buys on January 24th. So it is about time for me to do the first buy of January. Now, obviously, we know that Tesla used to represent way more before. If you check my last video about this portfolio, it used to represent about 30%. But as we know, Tesla is down 13% in the past month, and it was down 25% on January 27th when it got to $829. I do believe that I want to see it below $800, as my average cost is about $749, as we saw. But it had a nice drop, and now it has been recovering as well after this crazy week that we had. Now, I do have to say that this portfolio, as you guys know, is an experiment for a long-term experiment at the moment, but sooner or later I will transfer all these stocks, even though it's not huge amount of money, to my Robinhood portfolio after I decide and after I see the results of this experiment. At the moment, this is a portfolio of my M1 Finance. If you like this platform and you want to open an account with them, you can use my link down below, and you and I will get $50 after you deposit $100 in the platform and trade those $100 or invest those $100 for 15 days. After that, you and I will get $50 back, which I'm very grateful for many of you that have used my links. As you can see here, all these $50, $50, 50, 50, and 50 here is mainly because of referral bonus from you guys. I'm very happy about it. I'm very thankful for that. So yes, this is my portfolio at the moment. It has not changed that much since last month. The growth was not growth at all. As we can see, that is actually down $126 in the past month, which is around 9%. Remember that this is a money weighted return and not a time weighted return, which is completely different from this holdings, which is a time weighted return, which are my unrealized gains. But now let me know in the comment section below what you think about this portfolio. If you have any recommendations or so, for me to invest in new stocks, or maybe to lead an ETF or a stock, or anything that you would like to tell me. Please let me know in the comment section below. I will leave you here a video of the 5 stocks that I'm looking to buy on my Robinhood portfolio this month, and here for you to subscribe. Thank you, and see you next time.